All right, let's cut to the chase. I have SPX, TNX, VIX, and gold futures pulled up. I like to see these things together all at once. I know it's kind of a lot of information, but these are monthly charts of the same period showing just about all of 2018 to present. And I think when you can see all the information at once, it can be a little easier to understand. So let's start with SPX. We came out of a weird corrective phase, a broadening top, and the markets popped higher, right? And this was the COVID crisis crash here that gave us this low. And now the price is starting to retrace, moving through towards the 50% retracement from the COVID high. So that's a big deal. This has turned into a big dip, isn't it? Yeah. And I've been bearish, and now I'm just thinking this is looking even more bearish. Look at what VIX did. VIX was looking like pretty stable, kind of bouncy through this broadening top. And then it popped right when the COVID stuff started to go down, and it was nuts. Since then, VIX has set a low, broken a downtrend, and is now currently consolidating in an uptrend. VIX is consolidating in an uptrend. This is going to be a big move, and we just set a higher low. So VIX looks like it's ready to go, bah, go way up. Meanwhile, through the same period of time, we have the 10-year Treasury yield, which crashed and has now been on an absolute tear. Like, hello, can I call? Like, is anyone hearing? Look at this thing. This is beautiful. Huge corrective move higher. Huge corrective move higher, and it's possible that it's just that we're at the top of a wave 3. And so that might mean a little pullback and an extension higher even. Insane, right? Look how, and then look at gold futures. Look what gold futures did. Oh man, it's a huge flagpole, and then you've got the flag, and that's not really what it is, of course. It's actually like a handle on like this massive cup and handle. Look at that. That is a cup and handle. How many years am I scrolling through here? That's 2001 right here. And it's just like, woo, that's cup and handle. And guess what? We've broken out of it to the upside, and we've had to push higher, so this would be the end of corrective wave. We're looking for B here, I think. I think we're going to get that bottom here near that 1780 level, and then we're going to set a new high. And that's going to confirm a continuation of bullish action here in gold. Gold looks like it's ready to go up. VIX looks like it's ready to explode. The stock market is in a stock market crash, and 10-year Treasury yields are on a tear. So you tell me what's going on. Okay, so I mean, this is amazing stuff. I do want to look at SPX a little more closely. I figured out a good way to look at the current corrective phase we're in. So let me see here. Elliott primary wave plus. Okay, so I want to go Elliott wave primary minus. So I'm charting these. Here we go. I decided that rather than a descending broadening wedge, that actually what we had was the top of a cycle wave 5 right here, and the price overthrew the channel that this motive wave had followed right after it threw under during the COVID crisis. So wave 4 throw under, we had a wave 5 throw over, and then the broadening pattern, the corrective phase pattern, is just starting after that correction from the throw over, and that would give you a broadening top, which is awesome. So I broke down into a primary wave pattern, A, B, and C. You can see that the circle A, circle B, circle C, A, B, C. And then I broke those down too into corrective waveforms, and what I found was that this is an expanded flat, a 335 pattern, and this follows that parameter very well. I think that it's possible too that we're getting intermediate waves now, 1, 2, 3, 4, and we're looking for 5, and 5 is probably going to be the big one. Wave 5 can be huge, and SPX loves to extend wave 5, and we just started it, and it's beginning a bearish breakout of this broadening top. It's like, this thing looks like it's just ready to tear down. It's nuts. I mean, that's just what it looks like. You've got patterns with closes outside of the trend lines, and it follows an Elliott wave pattern. Okay, pullbacks are common. Pullbacks, that is to say, where the price would now break out and then pull back up. That's very common. There's like a 65% chance of that, so always expect it. That's what Bukowski says. When I went ahead and calculated this price target, I got a target of 3,462. 34.62. So that goes very nicely with what I've been saying earlier, that there's still more downside to be had. I mean, especially when VIX, looks like VIX is going to come and spike up again, you know? It wouldn't surprise me if we got a similar high. Oh my goodness. It's probably not going to be a similar high. It'll probably be like a Fibonacci retracement of the height of the initial boom. In fact, I bet you it's going to be like 78.6 or 61.8 or something like that. So nonetheless, it looks like gold's ready to make a freaking run. Stock market looks like it's ready to take a dive, and VIX is just like ready to go unhinged. That's all I want to talk about today. We'll round about next week, and we'll see what these charts look like. I think most of these are on a monthly chart, so maybe I have to do this only once a month. I don't know, but okay, we'll see what happens tomorrow. Happy trading.